السلام عليكم ورحمة الله وبركاته. النهارده هنتكلم على قوائم مالية أو هنعمل بريباريشن لقوائم مالية باللغة الإنجليزية زي ما الناس طلبت مننا. آه السلام عليكم ورحمة الله وبركاته. We are going to prepare the financial statement as we committed before. To prepare the financial statement, we have to have the last year financial. Here's the last year is 2021, and we are going to prepare 2022. Also, we have to have the trial balance for the year, and we have to check the opening and movement and closing balance. It has to be equal like this. So the opening balance are okay. Also movement, totals, and closing are okay. Here is the balances, opening and movement and closing. Now we are going to start to prepare the financial statement for the year. First of all, to prepare the financial statement for 1 year, we have to move forward all the balances for the last year from the audited financial statement, and we have to reconcile it with the opening balance on the trial balance. So here is, we assume that this is the last year financial for 2021. We have to put the balances. First of all, we have to put all the balances. Property, plant, and equipments 4,794. Also the cash and cash equivalent 717,343. Accounts receivable 374,720. Other debit account 42,807. First of all, we have to put the balances only. We have just to put all the balances as it is on the last year, as it is audited from the external auditor. 25,000, this is the capital, minus 787,681. This is the accumulated losses. Also, employee defined benefits 134,749. 27324221079,650. So both debit and credits now are equal. Debits and credits are equal. So we have to move to the income statement. This one finished. Income statement, we have also to put the balances minus 4224069, 23,500 minus 16,030,846. Okay. Now we are going to go to the changes in equity balances. We have to put here the balances. Opening balance for the capital 25,000. Opening balance for the last year for the accumulated loss is minus 293076. And the total comprehensive profit for this year or losses for this year minus 494,605. So total comprehensive loss is not profit. Losses. Okay. We have to put the totals. What's here? Okay, we got it. Now go to the cash flow statement. Cash flow statement starting from the losses before tax. Let me read this color. Losses before tax is minus 494,605. Depreciation is 185,102,400. Okay, accounts receivable is, the change in account receivable here is 297,897 minus 37,444. We are just moving the number from the last year to this year, and we will reconcile the number with the opening balance on the trial balance. So it will not make a problem for this year when we are going to move the balances from the trial balance to our financials. Now the total is okay. Also the purchase of property, plant, and equipments. This is 4454. Here it is. Okay, well done. This is the total. It's going and it's reconciled with the cash on the statement of financial position, and it's okay. So let us move forward. Here is the ending balance is the beginning balance for the next year. So we are putting the ending balance for the equipments 26546, 12692. So also totals. Here we are going to put the ending balance for 2021 will be the opening balance for 2022. Also for accumulated depreciation, it will be like this. So the ending balance for last year is the opening balance for this year. Now on just we are going to move the balances, so we will start from our trial balance for this year. So I know that's 717,343. Here is the receivable 480,482 minus 105,6762. This is the provision for debtful account. Petty cash 17,091. The prepaid expenses 15,216. Advance payment to supplier 9,500. 1,000 for rental deposit. For the inventory 721,647. Related parties, we have to put 1, 2, 3, 6, 8, 5, 7, 85, 972. Boring. It's boring to move only the balances like this, but we will go and work right now with the trial balance. 24 for this is the end of service benefit, opening balance plus end of service benefit for the year, the cost for the year. This is a trade payable 2732422. Also for other creditors 466554. Also for accurate expense 338262. For provision 111327. For the value added tax for the value added tax 163507. Now in the last step for the last year financials, now we are going to put the cost of revenue 621549. The purchases are 4,324,167 real 721647. And here we are going to put the same numbers. I know this going to move the numbers like this, but what we can do, we have to put the balances. Okay, well done. Now, no need for the last year financials if everything are okay right now. So now let us start with the trial balance. Once we bought the 2021 balances from the last year audited financial, we have to ensure that the opening balance are okay with the opening balance with our trial balance. I make sure that everything is are okay with the opening balance. Now I will move forward to fill the draft with our financials 2022. Now we will start from the notes disclosure. Okay, so here cash in bank. Actually, here is the cash in bank, Saudi British Bank and Al Blad Bank. So the amount here has to be the total of the amount of these amounts. This one plus this one. I have bought it the bank balances already finished. So for the accounts receivable, for the client or accounts receivable, the debit account are this amount 3,397,808. So also account receivable done. For the inventory, we have to go to the inventory section here and we will update it with the inventory which are mentioned on the trial balance, and it's okay. For the petty cash, there is a different account of petty cash, 1, 2, 3, 4 accounts of petty cash. So we have to put all on the petty cash. So I will make it equal this plus this plus this plus the last one. So this is the total amount of the petty cash. Prepaid, there is two accounts of prepaid expense, the governmental and prepaid rental. So we will calculate both of them, this one plus this one on the prepaid expense. So now advance it to supplier, it was 9,500. Now it's 0. So I'll make it blank or I will put 0. Now the trade payable. So we will go to the next tab. Here is the trade payable. Trade payable are 6,024,683. So this is the total trade payable. So we have finished this too. Now we are going to the fixed assets which are there. So here on the fixed asset, we have to ensure about the opening balance, additions and exclusions from the opening balance. So we have to make sure about the additions and exclusion from the non-current asset, the property, plant and equipment, and also its depreciation. So we have to open the trial balance to check first of all the opening balance are it okay? Yes, 12,692 and 26,5 46. The opening balance are okay. Now we will go to the movement. The movement here for the furniture and fixture, there is addition of 67,160. So we will make it equal this amount. And also for the equipment, it will make equal this amount. Now for the exclusion, here the property plant equipments are going to credit. It means that some of these are excluded from the fixed asset or has sold out. So furniture equal minus. Here for the exclusion we have to put it minus. Okay, here 11,000, so we will make it minus the amount. So we will go to the ending balance. Ending balance here is 69,852, also 62,389. So the ending balance are okay. Let us move forward. For the accumulated depreciation, also the same. We have to ensure the opening balance. Is it correct with the opening balance, which we are showing in our financial for the year 2021? It's okay. So we are going forward to check the additions and exclusion. As we know, the accumulated depreciation is a credit account. So when it is coming to be credit like this is the additions. The additions is the credit portion of the accumulated depreciation. So the credit amount here for the equipment is 15,978. Here is 13,462. Now the exclusion 3,500 and 5,000. So we will make it equal minus this amount for the equipments minus this amount for the furniture. So we will check now the ending balance. Are it okay? It's okay. Okay. Well done. Let's move forward. There is a rental deposit, 1,000 riyal on the debit account. We will go to again to the debit accounts, cash and cash equivalent, rental deposit, 1,000 riyal. We will put 1,000 riyal. We will go again to the closing balance. We will focus on the closing balance, which are showing here. Okay. Provisions. There are provisions. Provisions in the provision and capital section. It was 171,115. Where is the provision? There is something on the opening balance. No, this is the movement, not the opening. So the ending balance for the provision it equal the ending balance which are here. Okay, well done. The opening balance, let us check the opening balance. Is it okay? Yes, the opening balance was the same. Okay, let us try to move forward and finalize this one. For gratuity, we have to go end-ups on the notes disclosures. For the opening balance has to be the ending balance for last year. So we have to check also the trial balance. So the opening balance was 134,749, 134,749. It equal the opening balance. Okay. Now we will check the movement because the movement maybe there is cost for the year and also paid end of service benefit for the year. So here there is a cost for the year 24,520. There is no payment for the year. The ending balance are equal with our ending balance here and everything are okay. So let us move forward for the next step. Provision for bad debt, it has to be deducted from the debitor account, which are here. Debitor account. So it equal minus 105 like this. It's okay. No, it equal minus the closing balance of the debitor account. Bad debt. Okay, so this is also okay. The VAT payable are in the payable account, VAT value-added tax payables. So it equal the ending balance of the VAT payable, this one. Advances from clients, it has to be here. Equal advances from clients. Okay, let us highlight this one with yellow ones so we will know that we have finished. The retained earnings, we have to focus on this number because it is making many mistakes and many problems. Here it has to be the same as here is as in the changes in equity statement. The retained earnings here has to be reconciled with accumulated losses, which is in the end with changes in equity statement. Okay, let us move forward. Again, the capital, we have a disclosure about the capital and we get, as I told you before, we are getting this disclosure from from the article of association. Okay, it's a correct 25,000, no issues for that. Let us move again. Related parties account, debit accounts. So we will go to the debit account, related parties 1108, 109, 85, 972. We have finished both of them also. And now only accrued expenses, it's remaining. So we will put the accrued expense here in the accrued expense. صفات مستحقة, accrued expense, and we have to highlight. Only the sales are here still remaining. We didn't finish, so we will put the sales, total sales on the income statement. Sales, total sales 5841958. Also for the freight income, this is other income 1,500. Also the capital is this amount. Capital gain from exclusion of the asset. We have finished this one. Regarding now, we have to go the disclosure of cost of goods sold to check. Beginning stock is the ending stock for the last year, and the ending stock is the ending stock on our financials or on our notes disclosure. So this is the ending stock. So the total purchases here, we don't have this one. We have only the cost of goods sold. So this amount is 4485933. So we know the opening stock or beginning stock and ending stock, and we don't know the purchases. We know the total cost of goods sold, and the equation is saying that cost of goods sold equals opening stock plus purchases minus ending stock. So the total purchases will equal the total cost minus opening stock plus ending stock. So here is the purchases. Also here we have to put minus ending stock. It will give us the same figures. Once we put the summation, it will give us the same figure, I think. So here is the same figure for 485,933. It's okay. The equation is saying that total cost of goods sold equal opening stock plus purchases minus ending stock. From this equation, we can get the purchases. Now we have to put all the expense. I'll get it from the ending balance, the closing balance from here. Actually, these figures are here because okay. In order not to make mistakes, here is the closing balance. I have to take all of these balances and put it here. Salaries and wages, also governmental. So these are okay. Also custom fees, shipping fees. Again. Shipping fees. Okay. Here we go. Visa fees. And we will put the expense. Maybe we have to some or put some expenses with each others. So no issue with legal and professional fees, employee benefits, end of service benefits, rental. Okay, and go so on. So I'll take all of them as I already ordered all of them in order not to take many time to move all the balances from there to here or here to there. So once I put it, I think once the statement of financial position equals, everything will be okay here. We have to take this figure from, okay, we have to first of all move the balances from the last year on the statement, the changes in equity statement. We have to move forward the opening balance and also the balances which are coming from. Now, no need for the trial balance. We have finished all of this. Now I have to put the opening balance for 2021. The ending balance for 2021, it will be moved forward to the opening balance of 2022. And now we have some profit or losses on the income statement as we saw here. So we have to take the balances also to reconcile that changes in equity statement. Here we go to the statement of financial position. Everything are okay because the net, as you saw here, the net revenue or losses in income statement it is going to the changes in equity statement. So the total losses for last year, 494605, it is going to here on the changes in equity statement. Also the total loss for the year, it has to be added. It has to be added to the losses for last year, which is coming from last year losses or profit, and it has to be summed with the net profit or net losses for the year, and last it has to go to the statement of financial position. Now, still we have the cash flow statement. Cash flow, it is starting from losses or profit before tax. So we will go to the income statement, take the losses or profit before tax. Only from the income statement we will get this number. And now we have to calculate the depreciation, total depreciation for the year. This is just non-cash items. Non-cash items we have to adjust. The first non-cash items are depreciation, and here is end of service benefits for the year. Here we have to say the profits from exclusion of assets. And we have to put the profit which is coming in the income statement also. The capital gain. Now the change in account receivable. Other debtors. Change in other debtors. 2021 minus 2022. The inventory changes equal 2021 minus 2022. Not minus this one. Okay. Accounts payable, it means 2022 minus 2021. Other creditors minus 2021. Amount due from related party 2021 minus 2022. Also paid zakat, no paid zakat. Also paid end of service allowance, we have to take it from here. No allowance paid. Okay, now purchases of property, plant and equipment. The total purchases are this amount. Okay, but it has to be minus, so it decreases the cash. So property, plant and equipment purchases and asset exclusion. This one minus this one. Here we go. The difference was here. We have calculated again and everything are okay. So the statement of financial position are okay. Income statement and other comprehensive income. Changes in equity statement and cash flow statement and the notes disclosure. Thank you so much for watching our video. See you later. Bye bye.